you're never going to buy a private island being an employee at a large organization like that. You're going to have to go build something yourself. And that's where I found real estate and where my journey started for that.
Welcome to the Fully Funded Show. Whether you're a capital raiser, deal sponsor, fund manager, or LP investor, we've got the insights you need for investing success. Join Sam Silverman each week for expert interviews, insider tips, and strategies to fully fund your ventures. Let's go!
All right, we are back with the Fully Funded Show, this time with Matt Fore from Next Level Income. Matt, what's going on?
Not much. I am excited. It's Friday, excited to be here, and looking forward to getting into it.
Cool. Yeah, I'm excited to spend some time with you. I know your partner, Chris, very well. Chris is awesome, one of our coaches here at Fully Funded. If you haven't connected with Matt or Chris, definitely go do so as well. But Matt, kind of walk us through your background and what it is you're working on today. I know you and I talked offline, have somewhat of a similar background ourselves actually too, so we'd love to hear it from your words.
Yeah, so in my professional life, I'm based out of Nashville, Tennessee. I've spent 15 plus years in sales and sales leadership at some of the largest technology companies in the world. The way I got involved in real estate, though, was in 2015, we landed a net new 8-figure contract with huge margins on it. And I saw what that was going to do to my quota attainment. We were going to blow it out, and I was going to earn a life-changing commission check. So I started thinking about like, hey, how am I going to spend this money? What am I going to do? And started asking some friends and mentors. I heard everything from stocks, bonds, annuities, this thing called Bitcoin at the time. And then I had a friend and a mentor who was like, hey, you should take a look at this real estate stuff. It's got cash flow, appreciation, some tax benefits. He owned 4 properties in the Nashville area, free and clear, and they were spitting off good cash flow. And so I was like, okay, I'll read the little purple book. I'll get on Bigger Pockets. And then I was sold on the real estate stuff. But then, Sam, my story takes a turn. I got a call the week of Christmas from my VP at the time that said I wasn't going to get that commission check that I was expecting, that I was only going to get 2 cents on the dollar. And it was at that point that I realized, like, hey, if I want to go achieve the level of financial success I have, get back to the causes that I care about, spend time doing the hobbies that I'm passionate about, that I'm going to have to go find some other way. And fortunately for me, I was already down this rabbit hole of real estate, so quickly bought my first property 3 months after that and started scaling from there. So that's a little bit about my background and history.
Yeah, I mean, in 2015, if you would have gone all Bitcoin, we probably wouldn't be having this conversation today.
That's right. I saw something on Reddit the other day that this guy put 50 grand in Bitcoin, what was it, like 15 years ago, and that would be worth like 200 million now or something like that. So should have taken that advice.
Yeah, it's interesting. Like all these, my background's similar to in the tech sales world, both as a leader and direct seller myself. And you see all of these companies have these whale clauses for deals, right? Which to me makes no sense, where if someone sells a deal that changes the trajectory of a company or a quarter or whatever it may be, like pay the person.
Right.
I always hated that time of the month, time of the quarter, getting on with finance, having to go fight for your team's commissions. Like that was just never, ever enjoyable to go do. So on your end, like what happened with that company? Did you leave? Did you go do something else? Like how that kind of change how you think about the sales world in general? Because for me personally, like I'm a huge believer in if you can go sell, that's one of the best careers you can go have, to give yourself that flexibility, earning potential, skills to go do other things. So yeah, kind of what happened to you from there?
Yeah, a couple of things I'd say on that is, one, it was a multi-billion-dollar a year company, right? And I was not going to make a bank-breaking commission check. Now, don't get me wrong, I probably would have thrown a wrench into the P&L and probably would have run past the P&L. But to your point, that's exactly what you want, right? Like we just ripped out a huge incumbent 8-figure deal. Like that's exactly what you want to incentivize your people to do. But I do think that sales is still one of the best careers that you can have. The ability to sell yourself, the ability to sell a product, the ability to sell why your spouse should do the chores over you that week is something that we will all need and carry forward. So it's definitely a good skill to have. And if you can sell, you'll never go hungry because there will always be a home for you someplace in the world in terms of a career, as long as you can sell. But it did change my perspective. I stayed with the company for another 6 months because like it happened over the week of Christmas. I didn't do a ton of the week of Christmas except for apply for different jobs and start looking for different roles where I felt like somebody would value me more. But it did put this idea in my mind that if you're going to work for a large organization, you're never going to buy a private island being an employee at a large organization like that. You're going to have to go build something yourself. And that's where I found real estate and where my journey started for that.
Yeah, you make a really good point. I should say it myself a ton. Like if you can go sell something, you'll have great career stability. You may have horrible job security, right?
That's
Just
right.
because you're one quarter away, like we were talking about, from getting fired, one quarter away from a multiple six-figure commission check, and it's very rarely an in-between type thing. Whereas being in those sales roles, especially selling enterprise deals like you were selling, they can be, one quarter you can go make more than 99% of people that you know in terms of a single check. So on your end, right, you stick down the sales route, start taking those skills to start doing things involved in real estate. I think you realize something too that's really important, right? Is that you're capped out when you look at the amount of money that you can go earn, right? Like walk us through what you mean by that. Because I think it's a really big point for people listening here is that yes, sales is a great career. Then yes, you learn a ton of skills you can go take elsewhere. But help us understand kind of that ceiling that you hit as a top performer when looking at year-over-year consistency of earnings.
Yeah, so there's two things I would say on that is one, like again, I was at a multi-billion dollar organization. I wasn't going to be making more than the CEO, the CFO, the COO, heck, even my SVP, right? All those people would have had a say in how much money I would make. And yeah, they'll let me have some good success, but I will never make seven figures, eight figures like they do on a consistent basis. Um, the second thing, and we were talking a little bit about this offline, is small company, large company, whatever company you work for, if you go sell $1 million, well, next year your quota is going to go to $2 million. And if you go sell $2 million that year, the next year it's going to bump up to $5 billion. And oh, by the way, we're going to cut your territory in half because now it's too big and we can hire two people. I mean, that's just the route of sales. And I think you do have to understand that that's going to be a part of your journey if you get into this and not get too frustrated with it. But you definitely have to know it going in because they're always going to look at how do we cap how much people are making just to fit it into a P&L so we can go scale this thing.
Yeah, it's really tough because in sales, especially in tech companies, right, you have your base salary and you have your variable component, and your variable component ties to a certain quota or goal they give you. And if you hit that goal, you earn your full attainment. And then there's everything from underperformance, overperformance, and you make your money in sales by overperforming. That rate you get in commission usually jumps up substantially once you hit a certain threshold or thresholds above that threshold. So for you, if they move that same goal and hit the same exact number that you hit the previous year, you'll likely make 2/3 or half what you made the year prior. But I think more importantly, you're then viewed in a way that's more negative in the organization relative to your performance.
Right. Right. Which leads to a whole another level of like career discussions and things like that. And don't get me like I know we're kind of going on a little rag here, but don't get me wrong. Sales, I'm so glad that I got into technology because technology is always evolving. You're always learning. The world is not going to go backwards in terms of technology. And I think I'm glad that I got into sales because you do get to, the more you sell, the more you eat, right? It is not one of those government jobs where it's like, hey, come from 9 to 5, punch your clock, move out. Like I was at the DMV the other day and I just thought about it for a second. This woman sits here and literally just processes paperwork for 25 years. That would be so hard for me to do personally. A lot of stability, but not a lot
For sure.
of intellectual stability, curiosity going on there.
Yeah, and not to rag on sales in any way. Like my background's similar. Like I'm so grateful I went down that path. And for most people, if you can perform really well in sales, you'll likely make a top 1% income for the area that you're in if you can go perform really well in sales. The difference is you won't have that level of ownership and equity and generational type wealth you can go build. So now that you made that pivot, right, in terms of taking those sales skills you've learned, taking the nuances of corporate America that you battled, like walk us through what you did next from there as well.
Yeah, so my journey started in just single family rentals. When I first got involved in real estate, I thought all you could do is fix and flip homes like you saw on HGTV, or you could buy the house down the street and rent it out. I had no idea you could do all this other stuff. So I started off doing single family, like turnkey, bought properties in my neighborhood because it was a new neighborhood. We were kind of got passed over in the path of progress here in Nashville back at that time. So bought a couple of houses in that area, then started doing some flips, did some burrs, did some things like that. But ultimately, like I ran out of capital. And what I mean by that is like the bank stopped lending me loans. So after 10, Fannie and Freddie don't want to lend you any more money because you fall out of their special box. So you really have two options: go find private money or go to local credit unions and banks. I was moving to Tampa at that time, where we were talking about before, and taking on some new career responsibilities. So it was at that point that I was like, okay, what could I do to stay involved in real estate, but do it on a different scale? So that's turned into doing some commercial passive deals, which then turned into doing more on the active side and being in the active side. So yeah, that's kind of my trajectory there.
So when you take that active side and being someone who is still involved in W-2 type role, right? Like most people are cautious to do that in terms of where their focus and time lies. Like help us understand how you manage, right, those two things, and help us understand why you went a certain direction that you did versus maybe being more active on the lead sponsor type side of the house as well.
Yeah, you have hit a sore subject in our household. There's been more than one conversation about how I allocate my time. But ultimately, there's two things that I really try to prioritize, and that's one, time blocking. So people ask me, like, how do I do the Ironman stuff and real estate and then working W-2 and all that? And it's really time blocking and knowing that, hey, in this 2 hours, I'm not going to let competing priorities compete. I'm just going to block it off for this specific activity. It also
Wait,
requires
so
me
let's
getting up. Yeah, go
so you
ahead.
mentioned it too, like go into the Ironman stuff because that stuff to me is always so nuts how people compete that hard in those things, which I think is just like a big testament to someone's like work ethic and character too. So like walk us through like what that looks like too. Sorry to cut you off, but that stuff always
Yeah.
interests me.
Yeah. So just to kind of level set, an Ironman is a 2.4 mile swim, 112-mile bike, 26.2 mile run. Yes, it's all in a single day. Yes, it's all in a single event. I have no idea why I do it either. I'm just a glutton for punishment, is kind of what I say. But ultimately, like, I have an addictive personality. I know that about myself. And I also have a competitive personality. And growing up, you were always playing team sports and high school sports and all those sorts of things. College, it was intramurals, and after college, it was kind of the rec leagues that they have for adults. But at a certain point, like, even you start aging out of those. So I was looking for a way to compete, to push myself, to kind of continue to be involved athletically. And I found the sport. One thing I love about the sport is, like, LeBron James was meant to be an athlete. 6'8", 225 pounds, 50-inch vertical jump, like, takes care of his body, does all the right things. I'm not like insulting him that way, but genetically dispositioned to be an athlete. An Ironman, no one's born to do that kind of a race. You have to work at it every single day and show up every day to even get to the starting line. So the amount of respect that is within the community for the people that just show up on race day is very high, because we've all been through the same journey together. And that's one thing I love about the sport, which is true about professional, which is true about like personal life, is what are the little things that you can do every single day to get that 1% better to achieve that bigger goal. Very similar with investing.
So when you say those numbers too, like what I think happens for people at times, they don't realize how much that actually is, or it's so far ahead or just more in terms of volume than things they do, they can't really understand like what a train day looks like, right? Like walk us through what a typical week of training looks like leading up to an event.
Yeah. So 3 weeks before the event, it's, well, not 3 weeks. I would say probably like 6 to 7 weeks out. You're having your big weeks. Those are 25-hour weeks where it's like, hey, on a Saturday, you're going to wake up, you're going to drive 45 minutes away to get on a bike so you can not get hit by a car. You're going to ride for 6 hours. You're going to get off the bike. You're going to go run for an hour. You're going to drive 45 minutes back. You're going to shower, eat, sleep, wake up the next day and go for a 3-hour run and a 2-hour bike or something like that. So those are really, really long weeks. And that may seem daunting at the time. No one starts there, right? It starts with the go for a 30-minute run, go for a swim, and then go for a 30-minute run, go for a bike, go for a bike, and then go for a run. So just like if you want to get involved in raising capital, being involved in big commercial deals, doing anything big in life starts with that first step. And I think so often in life, we think about like starting line, finish line. Finish line has to be perfect before I start, when really the first thing you need to be looking at is like, what's the first step you can do? Laying out your clothes in the morning. Okay, what's the next thing you can do? Put on those clothes in the morning and go outside for a run. So that's one thing it's really taught me that I think has really helped me both professionally and personally.
Yeah, I think a big thing there too is just the discipline it forced you to go have in terms of how you think about how you break out your time, how you train, how you recover, how you eat and sleep, right?
Yep.
And I know that was kind of you leading into how you go block out time, which I think is one of the best exercises there possibly is for productivity. I'm used to be better at it than I am today, something I definitely want to get more back into. So, like, what does that look like for you in terms of blocking out your time for productivity to go manage things like the job, the business, the training, the family, right? All those things.
Yeah. So my morning always starts at like 4 to 4:15 in the morning, because I want to be doing my workout by 5 to 6. If I wait until the kids get up, if I wait until the afternoon, life is going to compete for your priorities. Someone else is going to dictate your schedule. So I'm big on paying yourself first, whether that's reading, whether that's praying, whether that's meditating, whether that's working out. You should do that the first thing you do in the morning. So I'm big on like just making sure that I knock out my workout first thing in the morning. I always block off my lunch, and I always block off from 6 p.m. on, which means you can't get me on a call at lunchtime unless I pull you into a call, like unless I want you during that time. You can't just proactively book time on my calendar for that. And same with after 6. The kids get off the bus at 4:15. Usually we got soccer practice at 6, so I'm off trying to think about them and being present with them. So I think that's where my day starts in terms of like blocking off time. And then it's really about like you probably do something similar. What's the theme of the week? What's the theme of the day that I need to get done? If something's like in the middle of a big capital raise, it's okay, I need to do proactive outreach. I know that I'm probably going to be better at that in the morning than afternoon. So I'm going to do that in the morning. So I'll block off that 9 to 10:30 kind of thing. So if you start thinking of your life as, or your weeks as just puzzle pieces and prioritizing what you want to prioritize, you'll get to wherever you're trying to go faster.
Yeah, and you hit the nail on the head too, right? When looking at, for example, your outreach, right? Your super high value activities. It's all just understanding too, like as a person, when do you operate better for which type of tasks as well? Like for me, in the same way, I am way better in the morning, right? Once it hits early afternoon, I'm happy to get on phone calls, happy to do some things like that, but it's much more so reactive versus proactive type work. And it's not your best quality of work. So I think it's understanding, not each hour is not valued the same when you're looking at how much you can get done in
That's
that
right.
time period based on who you are. And it can be different for every person as to when those things are, what those things are. So I'd say the more you know yourself that way too, usually the better off you are when looking at being as productive as possible.
Yeah. And the only thing I would say there too is like reminding yourself of what's important. So I'll usually leave a little note on my desk on something that I'm trying to do that day. When I was first getting on my financial journey after the whole commission check debacle, the first thing I would do in the morning is look at my personal capital or now Empower. Because even though it didn't change a lot from day to day, it told my brain subconsciously what's important and what I was driving towards.
So shifting gears a little bit here too, I think in the capital raising or real estate investing or just investing in productivity space in general, sales included, how do you really think about how to be really productive each day versus being really busy? Right? I used to run sales floors myself, and you'd see people all the time who were running 100 miles an hour, banging their head into the wall over and over and over again. And it's tough too because they feel as though they're working super hard, they're making the effort, they're putting in the wrong effort. So how do you really balance what's productive and what is just a busy type task, and how you rank the order of things you go complete in the priority around them?
Yeah, you must have been following me around this week because that's a conversation I've had over and over and over this week. Just because someone's willing to go to lunch with you does not mean you should go to lunch with them, or prioritize them. So I boil it down to the simple statement of find where you can make an impact and go be impactful. So I don't know if you want to go from there, but that's always what I'm thinking is, can I make an impact in this situation? A lot of things you can't really impact, but people want to drag you in just so misery loves company. And it's like, I don't need to be a part of this because there's nothing I can do to change the political system, the tax rate systems, things like that. If I really want to make an impact, I should go run for office instead of just complaining about it, for example. But I always think about when I'm being asked to do something or being brought into a situation, is this something I can impact? Do I have the skill set, or do I need to just link this person up to the right person that can get something done? So that's essentially how I start thinking about prioritization.
Yeah, and so let's be really tactical here too. So someone say you guys are launching a new capital raise, right? New deal goes under contract. You're working to start, your window of time, right? Like, what does that look like for you in terms of how you prioritize to go get that raise done as efficiently as possible?
Yeah. So, tactically speaking, who already knows you, right? Am I more likely to cold DM somebody on LinkedIn and pull them into my ecosystem and teach them about what we do and then get them to invest with us in the next 4 weeks? Probably not. Am I more likely to look at our current investor base and people that already invested with us, know us, like us, trust us, see how we operate, see how we communicate, and entertain them into one of our newest deals? Yes. So that's where usually I start is like who's already invested with us. And then the next tier of people that I really look at is like who have I had a meeting with in the past 90 days? Because that's someone how I always leave my first calls with people of I'm going to send you a follow-up email with like sample deals that we've done in the past. So just so that you can understand how we structure things, what that looks like. And then since I've already kind of primed them with that, I go back with the next deal that we're launching and say, okay, now here's what it actually looks like in a live deal. And let's talk through tactics of like what next steps would look like. So I don't know if that directly answers your question, but that's kind of how I view it and how I look at it.
Yeah, it does. I think a lot of people they always want to go focus on bringing in new folks. And I think it's a huge part of the business from looking at growing and expanding the people and potential investors that you work with. But I'm sure you saw it in sales too, right? Doing both new logo is usually a hell of a lot harder than existing accounts. Usually you see a quota reflective of that too, right? Usually a new logo quota is half, a third, a quarter of what an existing account manager has to go sell into their existing accounts. So on your end, like how do what's that process look like for you to go re-engage people on your list, and how do you think about the prioritization there too? Just because I'm sure people listening to this, they're always thinking about new investors, new investors, new investors, and for them, digging deeper with folks they may know may make a big difference already too.
Yep. So one couple things I want to say on that. First is we strongly believe that we should not have to pull people into our investor club. If we are pulling them into our investor club, we might be putting them in a situation where they don't understand what they're even investing in, what real estate is, what's going on in the market, how this all plays, how they get paid, all these sorts of things. So it just ends up as a bad situation. If you have some sort of funnel and you're having to hit them 4 or 5 times after the funnel's completed, you're probably best spending your time somewhere else because that's going to lead to a bad experience on both sides if you pull someone into an investment. The second thing I would say is exactly what you said. Like protect your base is one of our big things in technology. If you already have a software platform in that customer's environment and install in that customer's environment, it is so much easier to go explain how that software is helping them, revalidate the value of what they bought. You thought you were buying this, it's performing up to that. Let me show you some stats to show you that it's performing up to that. And I think too often in capital raising and in just sales in general, we forget about that piece. Like everybody says, what's your 30, 60, 90 plan, 30-day, 60-day, 90-day plan? They forget about the 120. You have to go back and make sure all these things that I said I was going to do, are they actually working? And so after you sell something to a customer, you want to make sure that it's actually working the way you promise. Similar to investing, like if somebody places capital with you, and we've gone through 2 years of very low deal flow in commercial real estate, you probably want to touch that investor and just talk about like, hey, this is what's going on in the properties. I know I sent you the investor, like the monthly report of what's going on, but let me walk you through what we're actually doing on this property. So there's a level of familiarity. It opens up a conversation with what else is going on in their life. And they do feel like there's a little bit more of a personal connection. So I'll stop there. I don't know if that answers your question, but that's generally how I kind of think about that.
It does, yeah. The personal touch is really important too, right? People don't want you to reach out to them whenever it is that you need something, right?
Correct.
The ability of going to touch and just offer an explanation and context where certain things, whether it be sales or investing into projects as well, as the operator, as the seller, you may have a lot more daily experience in what's going on and understand things more clearly than someone who invests super part time, right? They they like you, they trust you, they know you, they write you a check, and they could be totally hands off. There are certain things that you may take for granted in terms of knowledge where it may not be common knowledge to them at all. So I think going that extra step can go a very, very long way.
Let me also say too, like there's a common idea of run to the fire. And what I mean by that is people are more likely to trust you and to work with you on bad situations if you communicate during that. Obviously, the past 2 years, 2.5 years have been an interesting time in commercial real estate. We have not done everything flawlessly. No one has. But are you willing to open up a conversation when that happens? Or are you shooting an email and declining a call? So I would encourage people as they're thinking about their journey, both in sales and raising capital, operating real estate, whatever it is, when something bad happens, you want to make sure you communicate it broadly so that everybody has a chance to kind of see it all at the same time. But running into the fire and having those proactive conversations is going to lead you much further on the other side than it will if you just, hey, I sent you an email. Did you not get it? Did you not read it?
For sure. And kind of shifting gears a bit now too, in terms of the partners that you work with, right? What's that process look like internally to decide, hey, is this partner, is this group a team, a deal structure, an asset class, a market that we feel confident in right now?
Yeah, great question. It starts with a few things. One, are they scalable? We're not going to do one-off deals with people because one-off deals just it's asking for trouble. You know as well as I know when you're in business with somebody, there's no perfect business. Something bad's going to happen, and you want to know that with that person that there's a track record of, hey, we've got other interest in mind, not just this. Whereas if you only have that one thing with that person, then they're more likely to not want to accommodate, and it's going to be a winner take all situation. So that's the first thing is like, how scalable is this? We're not going to do one deal. The second thing is really a vetting process of over 6 months to at least a year, meaning we see constant deal flow from operators that are like, hey, we would love you to partner with us on this. Can you take a look at this? Those sorts of things. We're always here to have a conversation. We're always willing to look at stuff with people. That doesn't mean we're always willing to partner with people. So we want to make sure that if somebody comes across our radar, we like them, we think they've run a good team, run good operations, that that we test that theory. Everybody is good in a first meeting. Can they be good over a long time? And then the last thing is I really want to know that somebody has a sense of detail, a sense of organization, a sense of care for the business, I guess is a better way to say it. There's somebody that both of us know that my first interaction with them was good. And every interaction with them since then, they've gotten more impressive to me because I asked them things on their underwriting and they're like, yeah, flip to tab 5, go to cell C67 and you'll see the answer. And I'm like, I didn't even know there were 5 tabs on here. Like, how did you know that? They just that ingrained in their business. In terms of asset classes, I mean, I think we look for a balance of one, we always want to make sure we preserve investor capital. So that's our first goal. Like we were talking about it before around returns. Returns are great, but you need to prioritize preserving investor capital first. So we're not going to run into data centers is something that I know a ton about. People are building those out hand over fist right now to accommodate the AI boom, but cap rates on those are like 2.5 right now. We're not going to just go run into something where it can expand and we lose a bunch of money. So we're looking for investor capital preservation first. And then second is ultimately, okay, how are we going to balance out our portfolio of we only look at cash flow generating opportunities. We're never going to do development deals, only cash flow generating deals that we feel like we can improve. So that's kind of how we look at it is like, where can we get the blend of cash flow and equity appreciation?
Got it. Yeah, it makes a ton of sense to build a portfolio diversified for your investors and things that you can, you feel as the market is pricing appropriately as well, and giving yourself that buffer room where if things shift a little bit, you still have enough margin there to go preserve capital too. So
That's right.
before we, hop off here too, like what advice do you have for someone either looking to go get into the world of sales as a career or looking to become an entrepreneur in some capacity? Reckon, what advice do you have for someone looking to get started in that sense?
Man, you need reps, I would say, most important than anything. You can see all the books behind me in my shelf, and I have hundreds more. Theoretical knowledge is great. Getting your teeth kicked in through bad examples or bad situations is probably where you're going to do the most learning. Actually, when I graduated college, my dad was like, hey, now's when the real learning begins. So getting reps is important. Finding a way to be around people that you think are going to pull you forward is the most important thing you can do. So don't always be looking for, hey, how can I make money out of this situation? I always think like, how can I make sure I make an impact on this person so I get sucked into their orbit and dragged up through their tailwind to wherever they're going. So maybe that's kind of the advice I would give is pick what area you want to focus on, write a list of 100 people that are really, really good in that area, and then figure out how you can be stuck in their orbit by adding value, because that's going to go further than getting paid $20 an hour, $50 an hour, $200 an hour, whatever that going rate is these days.
For sure. Yeah, the relationship piece of it, being around good people, that'll be a much bigger lift than the cash you can go make, especially at first. Cool. Before we hop here too, how and why should the listeners reach out to you?
Yeah. So why? Because I feel like I'm very curious and I love talking about this stuff. So if you're looking for somebody that you just want to introduce to, get started with, any of that stuff, I'm always open for that. But where I host a podcast as well called Ice Cream with Investors. We bring on different people from all the niches in real estate just to kind of understand how you can go make money in the real estate industry. Again, it's the biggest kept secret that's right in front of us is how we go invest in real estate, from parking lots to office to multifamily. I've got people from all those different niches on there. So you can check us out at Ice Cream with Investors on any of the podcast apps.
Cool. Well, hey, Matt, thanks for coming on.
Yeah, thanks for having me.
Thank you for tuning into the Fully Funded Show hosted by Sam Silverman. If you are enjoying the content, let's take your journey further in the Fully Funded Mastermind. The Fully Funded Mastermind offers more than just insights. It's a mastermind community designed to solve the real challenge of raising capital. By joining, you gain direct access to strategies, coaching, and a network dedicated to turning your financial goals into achievements. Don't let capital raising be a barrier to your success. Visit fullyfunded.capital to explore how our mastermind community can pave your way to financial growth.
Thanks for tuning in to the Fully Funded Show. If you enjoyed today's insights, hit follow, share with your investing pals, and drop us a review. Connect with us on social media for bonus content. Your success is our mission. Keep those funds flowing. See you next time.